Turns out today was the best day since March 5th for the S&P 500, best day since May for the Nasdaq. Tiffany, what about those concerns now that we're in earnings season around supply chain and inflation and margin pressures? What do you do with all of that?
Yeah, well, I think that those things are still here and they're still very real. And I think that, particularly when it comes to the supply chain, which is really going to ultimately affect the pressure in margins, and also, too, labor costs, right? So increased labor costs. All of these things are going to be around not only, I don't think, just through the end of the year, but at least possibly through like the next 18 months. So those things are very real. But then we can look at banks, right? So we can look at the fact that, JP, Citi, Wells Fargo, B of A, all reporting, they had a combined profit of $28.7 billion, right? And so, we look at banks and they kind of indicate kind of how things are doing, right? So how is the overall economy doing? How is the consumer doing? And like the overall theme is that, consumers are really kind of paying off their debts, right? So we kind of saw this, low credit card interest with some companies, but then in other companies like, JP Morgan. Of course, we saw that, M&A, them benefiting from M&A activity, IPOs. So, these banks, it's almost like, the consumer banks and then the investment banks. I own JP Morgan, I own Goldman Sachs. I really am interested to hear what they report this week. But, that's more of like diversified revenue stream. And that's really where we are at our firm. We like those.
Steph, in terms of the yield outlook, we mentioned earlier, impressive banks' performance in light of yields slipping this week, and kind of surprising given the strong CPI print, even if PPI was a little softer. Do you think yields will kind of peak now for the rest of the year?
I think yields go higher, Wilf. I mean, I think the economic data, especially today on initial claims, I'm really surprised that yields are down. If yields are down because the PPI was cooler than expected, that's silly because you have 8.6% year-over-year growth in the PPI, right? And then we know that we had a 5+ number with the CPI yesterday. And yesterday, the number in the CPI, you had rental increases of 0.5% month over month. That's very, very sticky parts of inflation, along with what Tiffany said on wages and labor shortages. So I think that yield should be higher, but I think the big debate is economic growth versus inflation, and how out of control does inflation get, and do you see demand destruction as a result? I do not think we're there yet. I really don't. I think I'm really excited about earnings because I want to hear what companies have to say about inflation, what they're doing about inflation. So far, we've had good results from Pepsi, from Levi's. Costco had really good comps. We talked about the banks. So I think the setup going into the end of the year is higher. It's good. I think earnings actually are going to beat. Not going to be as strong as last quarter, but they're going to beat. Numbers go higher. Stocks follow higher earnings. And so that's why I'm bullish into the end of the year, and along with yields.